Okay, what if they don't repay you? This is one of the top questions that I get in terms of private lending. People are afraid that, what if this person just doesn't pay me my money back? And that's a legitimate fear because that can very well happen. I know people that's happened to. But I will say that a lot of this comes on the front end, right? So not to say that everything is preventable, but you can definitely reduce risk with your processes and your own due diligence. And so making sure that you have thoroughly evaluated your borrower, whether it's an individual or an entity, making sure that you've done your own due diligence on the exact transaction that you're looking at, and making sure that you have the proper documentation in place to protect your investment. These are honestly some of the best ways to make it more likely that the person will pay you back or the entity will pay you back. But again, I mean, things happen, sometimes things just don't go the way that they planned. It could be that you gave a loan on a property and it was involved in a fire. And I mean, that's not something that can necessarily be predicted, but there are things you can do to protect your interests, right? You can get an insurance policy, that can help protect your interests. And that's kind of part of your due diligence in evaluating the transaction and protecting your investment. If for some reason the borrower defaults and can no longer make payments on the loan, or maybe they just disappear. These are, it sounds crazy, but I'm sure that this has happened to somebody. You want to make sure that you have a deed of trust that you can use if they don't pay you back, that you can foreclose on this property. You want to have made sure that that is allowed in the state that you're in, make sure that your interest is protected. And sometimes it means like, sometimes you can't even recover in that way. And maybe that is a risk you're not willing to accept. So for instance, in certain states, you need a lender's license and, to have a legitimate loan. And so if you don't have a lender's license in that state, but you did the loan anyway, it may be harder to recover if they don't pay you back because technically you are illegally lending in that state. And so these are things that you want to think about. This depends on, your own risk tolerance. I'm not saying that I would never recommend that, but I'm saying, that's something to think about. Like, how can I protect myself in this situation, if it comes up? And it's hard to think about for some people because, in the excitement of the moment, they're just thinking about getting their money back, and the excitement of the returns. But you have to also think about the risks. And sometimes the risk analysis is different depending on the amount of money that you're loaning. Maybe you're willing to take certain risks with smaller amounts that you're not willing to take with bigger amounts. And so there's definitely things you can put in place to make sure you have options if the person or the company does not pay you back. Personal guarantees, deeds of trust, making sure that all licensing and brokering requirements are met if they apply to you in that state. But insurance policies, but there's not a way to always just eliminate the risk of non-payment. So keep that in mind. Like, all investments involve some level of risk, and private lending is no different. So do what you got to do to protect yourself, protect your investment. And honestly, that's all I can say.